So is now a good time to buy commercial real estate? I get asked that on occasion by my clients, especially when we're in kind of market fluctuation points like we are actually now. So in 2025, we've had a lot of excitement and also uncertainty because we initially got a new president, and then that new president started enacting a lot of tariff policies that created a lot of uncertainty in the market. And there's a lot of people hoping the interest rate will go down, but it hasn't yet. So there's a lot of not sure what's going to happen. And so when investors feel like that, they're not sure, like, hey, should I go out and buy something? Should I not? So here's a couple of thoughts that I'll share with you in reference to that. Number one, think contrarian. So the mentality to follow the herd and do what everybody else is doing is pretty easy to adapt, because it's like our human nature. If that person's doing it, then that might be a good idea and I'll go do it too. Or, my buddy bought this and he said he made all kinds of money, so I'm going to go buy it too. So following what other people are doing is a natural inclination. But in investing, if you have the strength and kind of the spirit to go contrarian and do what somebody else is not doing, that can really aid you a lot if you can identify areas or trends where there's a opportunity to profit when other people are afraid. So for instance, think about the fact that Florida has had a lot of market depreciation recently because there was a huge influx after COVID-19. And then since we've had some pretty significant hurricanes and some other market adjustments, there's been some price devaluation. So now could be an excellent time, as long as you're confident you can get reasonably priced insurance, to go buy in the Florida market. So that's an example of thinking contrarian. And if you can do that and confidently execute, you're going to profit as an investor. So the second thing to consider, if you're not sure whether to invest or not, is what the underlying fundamentals are. So at the end of the day, does the deal still make money? Because that's obviously the point of investing in real estate. And if it still makes money at a reasonable asking price and today's interest rate, if you're going to be getting a loan, then it makes sense to purchase the property and move forward. So even if you have a 7% interest rate now, there's a pretty good chance it might go down a little bit. Not like it was before in 3s and 4s, but it will probably go down a little. And you might be able to refinance and get a better rate, but the deal's got to make sense now. So if it does, don't let fear stop you from going out and purchasing that property. And the third thing I would say is sometimes investors I see get tripped up because they say, well, the deal doesn't make sense at today's interest rate. Well, that may be true, but what solution is there? So back in the 1980s, when there was ridiculous, really high interest rates, people still bought real estate investments, but there was a lot of seller financing. So why not think about some creative ways to still make the deal work, even if it is true that the interest rate is higher? So I've done several deals recently where we had the seller hold a seller-held second mortgage. So if you can get a bank to do a first loan and, of course, disclose this to the bank that you want to place a second, but the seller would agree to doing that, that can be a great way to kind of layer your capital, so to speak, and get maybe a 70% loan from the bank at a 7% interest rate, but then have the seller hold a note for 15% at a 6% interest rate, or some version thereof with, different dynamics, because that could help make the deal make sense. And of course, your cash on cash should be higher if you're bringing less cash into the deal as well. So those are three things to keep in mind as you're evaluating, like, is it a good time to buy? Is it not? Make sure that you're considering the contrarian method or ideas, thinking about what other people aren't thinking about. You're evaluating if it's really a good deal. If it is, buy it. And number three, the creative financing and thinking out of the box, so to speak, on financing as well.